All right, we will go ahead and call the Hospital Authority Finance Committee meeting to order. It's currently 3:05. We'll start out with the conflict of interest statement. Ms. Nettles, Dr. Nettles, would you be willing to read that for us, please? Thank you.
Conflict of interest. And able to participate or that they elect to. Okay. All right, I will begin this once again. Conflict of interest. Opportunity for each member to disclose potential conflicts in their belief. They can be unbiased and able to participate or that they elect to recuse themselves from the matter.
Thank you very much. And also, I'd like to welcome you as your first rodeo to the Finance Committee. I appreciate your time, as do we all, and really will enjoy having you as part of the committee. Thank you.
Thank you very much.
Next item on the agenda is public comment. Okay. Seeing that we have no signups for public comment, we will move on to the next item on the agenda, which is the minutes. The minutes for the January 30th, 2025 meeting. If everyone has had an opportunity to review these minutes, are there any amendments or corrections to be made? Seeing none, I would ask for a motion to approve. All right, I'll second. All in favor? Aye, motion passes. Okay. Next item on the agenda is the fiscal year 24 audit update. We have a guest here with us as well. So Dr. Blackledge, we will work in conjunction with you, but do have Mrs. Katie Ferris here with Crossland, who is our external auditor. So Dr. Blackledge, would you rather go first or would you rather have? I would prefer for the auditor. Yes, ma'am. Okay. This is Ms. Katie Ferris. She is a CPA at Crossland, and they have performed this hospital's audit for several years. I've asked her to come and give an informational update. They just recently finished this audit at the end of January and have finalized their findings, but we will be moving to approve these at our March meeting. So, Ms. Ferris, thank you for your time. We appreciate you coming over and providing some advice and guidance. Thank you so much.
Thank you, Christy. As Christy said, my name is Katie Ferris. I'm an audit director with Crossland PLC, and we are the external auditors engaged to audit the hospital's financial statements. And these are the financial statements for the fiscal year ending June 30, 2024. I've got two reports I'm going to cover briefly. The first is our results on the audit, and this includes communications that we were required to go over at the conclusion of the audit as part of our professional standards. And that should be this booklet that you have with you. So we have drafted two auditors' reports in relation to our audit. The first is our independent auditor's report on the financial statements. That does express an unmodified opinion, which states that we believe the financial statements as presented are fairly stated in all material respects. The second report that we produce is the independent auditor's report on internal control over financial reporting and compliance. And that report discloses what we consider to be two findings of material weaknesses and two findings of significant deficiencies. And I'll go over those a little more here in a few minutes. Our responsibility under U.S. generally accepted auditing standards and government auditing standards is to express an opinion about whether the financial statements are fairly stated in all material respects. In doing so, we consider internal control over financial reporting in order to determine our audit procedures, but not to provide any assurance on the internal control over financial reporting. Accordingly, we do not express an opinion on the effectiveness of the internal control. However, we are required to disclose any findings that we might find in the course of performing our audit. We have performed the audit in accordance with the plan scope that was communicated in our planning communications. On page 4 of this book, you can see some of the areas of audit emphasis. Significant accounting policies for the hospital are disclosed in Note A to the financial statements. There have not been any significant changes in those in the fiscal year 24, and we believe those policies are appropriate for an organization such as the hospital. Estimates are an integral part of any set of financial statements. For the hospital, the most sensitive estimate affecting the financials is management's estimate regarding the allowances for the contractual adjustments and for doubtful accounts and third-party payer settlements. We evaluate the key factors and the assumptions used to develop those estimates and believe that they are reasonable after factoring in the audit adjustments that have been made. For purposes of this communication, an audit adjustment is defined as a proposed correction of the financial statements that, in our judgment, may not have been detected except through the audit procedures. A list of the audit adjustments that we made for fiscal year 2024 are included in Appendix A of this report. And the net impact or the net income effect of those audit adjustments for fiscal year 24 was approximately $10 million. The effects of any remaining uncorrected misstatements are immaterial to the financial statements as a whole, and those uncorrected misstatements are attached to the draft representation letter, which is included in Appendix B of this booklet. We had no discussions with management regarding alternative accounting treatments. For purposes of this communication, our professional standards define a disagreement with management as a financial accounting, reporting, or auditing matter, whether or not resolved to our satisfaction, that could be significant to the financial statements or the auditor's report, and we had no such disagreements. Management may consult with other accountants about auditing and accounting matters similar to obtaining a second opinion. It's perfectly acceptable for them to do so. We just ask to be notified so that we can ensure all relevant information has been communicated to the other accountant, and to our knowledge, there were no such consultations. Any issues discussed prior to our retention as the independent auditors were not a condition to our retention as the independent auditors. We did not identify any fraud or illegal acts during the course of our audit. We did encounter significant delays and difficulties in the audit process, which are primarily attributable to material weakness, which is included in the schedule of findings of the financial statements and reported as material weakness item number 2024-002. That finding provides a fairly comprehensive discussion of the nature of the significant delays that we encountered, so I won't speak on that further at this time. The main focus that I will have today is the internal control matters that we identified. As previously stated, we did have internal control findings related to our audit, 2 of which we believe to be material weaknesses and 2 to be significant deficiencies. We are required to be independent of the hospital in accordance with requirements of the American Institute of Certified Public Accountants and government auditing standards, and we can confirm that we are independent of the hospital. And then also included in this report is Appendix B, which is the draft management representation letter that we'll request the hospital to execute as part of our audit process. That letter states that management believes the financial statements are fairly stated and that they've provided us with everything we've requested during our audit. Any questions on any of those at this time? Yes.
Okay, so as we've chatted before on other calls, this is very CPA-ish, for lack of a better term. And if you were to boil this down and say this in layman's terms, when we talk about the 2 material weaknesses and the 2 significant deficiencies, spell that out in a way that those who do not have an accounting background would be able to understand that, and more importantly, talk about the effect of those issues.
Yes. So the findings that being discussed are included in the draft financial statements that you have before you. They start on page 45 of that report if you want to look at those as I briefly discussed that. So I think the main takeaway of what we're presenting is that we did identify these material weaknesses and significant deficiencies, which indicate an overall lack of adequate internal controls of the accounting function and the financial reporting process. So internal controls are the measures that should be in place to ensure that you have accurate and reliable financial reporting, which is used should be used to make sound financial decisions for the hospital. So a material weakness is a deficiency or combination of deficiencies in internal control, such that there is a reasonable possibility that a material misstatement could occur in the financial statements that would not be prevented or detected and corrected on a timely basis. And then a significant deficiency is less severe than a material weakness, but is still important enough to merit attention by those charged with governance, which is this committee and the board. So our findings relate to a few different specific financial statement areas, as well as overarching systemic deficiencies. And that is primarily the deficiencies around the financial close and reporting process. And that's included in finding 2024-002. As a result of our findings, we caused the need for us to create the 15 significant auditor proposed adjustments that are attached to the results book in Appendix A, that again had an approximate $10 million effect on the hospital's change in net position for fiscal year 24. And that we think the largest and most important finding to address here, like I said, is the one regarding the financial close and reporting process. So currently, daily transactions are recorded in the general ledger by the accounting team. However, at the end of each month, there is very little reconciliation and adjustment of that general ledger to complete and accurate supporting data and schedules, especially those from third parties such as Parallon and CareCloud. We also noted that there was a lack of effective review process of the accounting procedures and the results that were being conducted on a monthly or an annual basis, which again is an extremely important component of internal control. That's one of your strongest detective controls to identify any material misstatements. These are also findings that we have included in our reports to management and the board for a couple of years now. You can see in the, jumping ahead a little bit, you can see in the financial statements on, I believe it's page 53, our summary schedule of prior audit findings. You can see that of the 5 audit findings we had for fiscal year 23, 4 of those are repeated in the current year. So the takeaway on this is, without these controls in place, we believe that it's safe to say that the Finance Committee and the board have not been receiving accurate financial information on a monthly basis, and that makes it incredibly difficult for you to make informed financial and operating decisions for the hospital.
I appreciate your, like I said, taking it down to my level. I mean, those are the things that I think that is important for our committee to hear, since we come from an array of different backgrounds. So I just want to point out 3 pieces that I want to make sure I heard correctly. Mm-hmm. One, that these have been consistent issues, recurring finding and weaknesses over the last several years that have not mostly been corrected. The second thing is that there were 15 significant auditor proposed adjustments that had approximately a $10 million effect on the hospital's change in net position. Is that also accurate?
That's correct.
Okay. And the most important thing to me is that we don't have regular closing on each month. And so we do not have the ability to truly feel reconciled, and therefore that can throw off the material that is presented to all of us as a board, and specifically this finance committee, in terms of receiving the accurate financial information, and then again making it virtually impossible for us to provide true, I guess, informed decision making on the items that are coming to us, so contracts, et cetera. Is that accurate?
Yes.
Dr. Martin, Dr. Nettles, do you have any other questions or comments?
Not at this moment for me.
I've asked Ms. Ferris to also be kind enough to stick around and present again to the full board so that they have an opportunity as well. I feel like these are pretty significant findings, and especially the fact that they continue to reoccur here. I do have hope that we're going to really focus on these. I know last year at this same meeting, when they presented, I specifically had asked that we assign these responsibilities to individuals with a specific time frame and have a follow-up, which I'm not sure actually happened. So I'd like to make sure that for the record that this happens this year. And I trust that the current CFO and her team can make that happen on a regular and timely basis. So thank you so much for your time. Again, the work that Crossland has done, and in advance for your time next meeting. Thank you.
May I just add a comment?
Of course.
That since we do meet on a monthly basis, this seems doable. And if the expectation is very clear, it seems that would be our due diligence.
I appreciate that. Thank you. Dr. Blackledge.
First of all, I do want to say thank you. But number one, I've took a good set of notes as I haven't really been involved, but yesterday received the notice with the 4 findings and did work internally for our commitment to make sure that we duly note and respond, and we did on yesterday with our intent to resolve these 4 findings, and we will do so over this time period. What I do have is significant delays, and I do believe some of the verbiage was around the reserve methodology. Okay, because I haven't had this conversation. So, Ms. Ferris, I will be calling you. We'll be setting up time to have a discussion. I want to make sure that the communication can be open, right? So that's important for me. But for these 4 items, we will address those, and I wanted to make sure and clarify that it's the reserve methodology. And I do understand the monthly close process where we go in and we vet out and we evaluate the accounts receivables. That's what you're talking, okay, correct. So I do have an understanding from yesterday. We have made a commitment to work with Ms. Ferris and to put the right level of internal controls in place. And there are some questions that we do have. Can you imagine? There are some questions, so I'm looking forward to having that, particularly around the AR valuation piece of it by those major categories.
Okay. Again, as stated, we will move this to the March Finance Committee meeting for full approval. So if you don't mind, Ms. Lester, to make a note of that and add that back to the agenda for approval. The next item on the agenda is the fiscal year 26 budget preliminary. Back to Dr. Blackledge.
Good afternoon again. I will share, while I've been at NGH 17 months, I've been 30 days digging into the finance piece of it. But most importantly, we have a budget to present for you. So for me, that's a moment of pause and gratitude. Can we go to the next slide? It's not working? All right, well, we're going to keep moving. Madam Chair, if you agree. Seems like we got a technical. It's in the packet. Yeah, so we can keep moving. All right, one of the things in your packet, I don't know if everybody's at that page, it looks like we're still, I'll go ahead and, but economics, accountability, and culture. So as we've said and listened a little bit about internal controls, some of the items before we get into the detail of the FY26 budget include things that we need to make sure that we are sharing and we are creating from a finance department. For example, we've got to create a budget calendar for all the departments to be aware of, to set communication targets for all of those who are responsible for a budget. And what does that mean? What does that look like? That means that I know when there's an expectation of me to respond with variance and why these things are happening and why the decisions are made. I may need X more supplies than I did yesterday. Continuous improvement. One of the things that we are focused on is to ensure that we have productivity standards in place. What does documenting insight, not just having a conversation, but memorializing that so that when we're looking at our variances and our trends, we're able to identify and pinpoint the issue and problem and solve for that. Another one is the variance analysis process, defining it, what does it look like and who all should be involved. because that sets the tone for our communication around our financial obligations and components. And then the last one is, having the standing monthly or quarterly assessment to look at our financial performance. And so if I move to the next slide on there, we really want to talk about growth and what our intentions are. As we know, as it relates to growth today, we've got 4 categories. Each one of those categories, we've listed a percentage of growth anticipated over the period of time. And we have that for a 5-year period. So it fluctuates a little bit, and given everything that's occurring in our environment and the headwinds from the federal level, we're projecting overall a 2% and 5% as it relates to clinic visits. And on the next slide, when we think about our budget preparation, for us, it was taking the budget from FY25, running current projections through this 6-month period, and then working to propose a budget that was reasonable, customary, and would be sufficient for the need of this organization to provide the care to its patient population. And understanding that we made changes and modifications. We looked at salaries. You're going to see a decrease when I get to that. We looked at supplies. We actually increased that based on everything that's occurring. Pharmacy, a slight increase. Other revenues were pretty consistent. And then just 2 things that stood out. There is a general increase in the cost of healthcare goods and services, and then federal headwinds. And I call those headwinds because we can anticipate that something will change, but being able to pinpoint exactly what that is, whether it is a reduction in some of the Medicaid reimbursement or some other component. So those are what I call headwinds. We know they're there, they slap us in the face, and we just got to figure it out along the way. And on the next slide, when we think about...
Before we move on this last slide, if you don't mind,
Sure.
Dr. Blackledge, when we talk about, I guess, and maybe the slide before too, when we talk about this 2% growth assumptions as well as the 5% on clinics, and then also these assumptions with supply and pharmacy, how do those align? I guess it would be maybe more consistent if you look across the board in other areas of the nation or other areas of even the city with their costs. But I would assume that supply costs and pharmacy costs should be fairly standard. Is that a standard
Supply
number?
costs, pharmacy costs are fairly standard across the healthcare industry. I mean, what we pay in terms of supplies, they're going to be consistent. So that's going to be consistent. Another component that I didn't list is salaries tend to often in hospitals be about 50% of your expenses. So those are just a couple of nuggets, but yes.
And with salaries, that is based on, just to make sure I'm correct, the Metro sets that salary increase. Is that right, or do we set our?
The salary increase, Metro sets
Correct.
salary
Okay.
increase for us.
And what about the growth assumption? How did you guys come up with the 2% and 5% growth?
So the 2% and 5%, so when we look at clinics, for example, this year we are anticipating to have 50,000 visits in the clinics. I'll use that as an example. And when we look at our run rate in terms of month over month performance, we're projecting a 5% based on that indication and based on what we plan to do as it relates to marketing, as it relates to any outreach. And so that gives us about 57,500 visits.
And what has that marketing produced so far in the past, maybe
Well,
year over year?
We haven't gotten to it. It's the good part.
Oh, okay. All right,
But
never mind.
it's,
Sorry.
In your statistics, and this is what Keith will cover a little bit later for us, but if you look at clinic visits, that is the result of the efforts that we put towards increasing our visits. And we want more visits, so we want more initiatives to support bringing in more visits.
I had a question with the physicians and their salaries. What about the RVUs? Is that factored into it, or
This year,
what
we
they're
actually
producing?
have an initiative. I don't think I have it in front of me, but in our strategy planning piece of it, in those components, we've hardwired efforts to improve our RVU piece of it, but we do take that into consideration. And I've got my good partner, Dr. Stokes, over there, who works with us on that end.
Because that would generate I know we use the term bonus, I mean, this is clearly financial, but it does enhance.
It enhanced that.
The salary because of what they're producing in terms of patients that they're seeing.
It enhances that, and it gives us the opportunity to opt in to certain programs.
Okay.
Correct. I think we can.
And I just have one other question. Yeah, I am kind of curious about 2%. I've not heard, that seems kind of low in any setting. And so can you help me understand that a little bit better? I would, at least if you said 5, I think just generically I would kind of get it, but 2% seems.
We can say 5 across the board when we, and we can make that adjustment if you want to. But what
yeah, go ahead, please.
Can I hold that maybe?
Oh, yes, yeah.
Okay, because I think if you see, or we can advance the slide, but if you see where we are projecting and what our budget was, that's the variable piece that's missing, right? We can advance to the next slide.
No, keep going the way you have it.
Dr. Blackledge?
Yes.
So 2% and 5% are increase over last year's budget, right?
Correct.
Not over actual. So I would just point out that year-to-date, 6 months in, med-surg visits are 28% above budget. Surgery cases are outpatient 15% and inpatient 57% above budget.
The
So-
28% doesn't account for one of the clinics that was not included in the budget.
Okay.
And so,
And emergency visits are down 10%. But anyway, that sort of argues that these are conservative
right,
estimates.
with one not being in the budget, with that area. So we can look at that piece of it. If I talk about the budget and just jump right into the budget, so we're focused on revenues, operational expense, which includes labor, and then forecasting what things look like on a month-to-month trend versus a look back over a period of time. And so if you look to the left, that was our actual budget. And one of the things that we strongly considered is what was the run rate on the top line, total patient revenue? What did we look like? We had a budget of 330. You guys can see it at the top, 330 million. Might as well be 331 million. But our projection is 311. And so from that 311 listed in the projection was the 2% growth factor applied, which then got us to the 317. So when you ask that question, it does seem low. Then you also have to ask the question, was our budget realistic based on what where we had been performing and what we had been doing? Doesn't mean that we don't have initiatives in place to drive even further than that. But when you make a budget, we're looking at what we can see at this point in time and what we know. So that may share a little insight that you just can't glean otherwise just looking at that number on that page. But one of the reasons we share the budget here for the first time is so that we can get input from you guys. If I continue to go down in this budget, and I'm really going to focus on what's in the bracket all the way to the right. So we've got 2% growth increase budget, and I did explain that because our FY 2025 budget, when I look at the accuracy or when I look at, what that was developed on, as you all know, I've been in 30 days, not really sure. So I've got to use the forecasted data and the information that we have. If we go to the collections line and that collections activity, we actually increased that by 1.7 million from our projection run rate. And if you look at that 18% all the way to the left, right under the net patient revenue in the 21, our collection efforts are around 21%. So that resulted in the 1.7 increase. If we look at total other, any questions around, okay, if we look at total other, This is where the ask is listed as I have learned, and I kind of probably need to look at Ken over there too, as I have learned, but there's like 66 million that is our request. The most recent year, FY25, we made a request for 64 million, but we actually received 59, so then starting the year out 4 million behind, but our request this year is 66 as placed it as in our budget, proposed budget. If we move along, and that gives us 164 in net revenue, and that's patient and other revenue. If we move along to look at salaries, based on our projection of 2025 salaries at 61.8, we've reduced that to 61,000, so carved out almost $1 million, almost $2 million in that category. Contract labor, our run rate was about almost 15.8. We've carved out 5 million. And again, making these decisions based on things that we know and information and intelligence that we have, by whether it's me going to Dr. Elders, our CNO, she's probably sitting behind me, asking questions about her intentions, her plans, because it's that planning of that leader, because they are going to execute, but it's our responsibility to stay financially in tune with the activities that are occurring in their area, right? So that's contract labor down. Health benefits, FICA, those things are standard based on the FTEs and salaries. Pension, while pension is paid out through us, I don't have the exact history, but I know it is a placeholder and something that stays year over year, not necessarily a benefit to the employee pool, but paid out through us. So that gets us to salaries and benefits, which in total is probably like an $8 million decrease from the 25 projection. I've already spoken about supplies and pharmacy items, and I think you guys know pharmacy items are high cost to us as well. Other expenses, and I'll slow down right here, because other expenses, we spent a little bit of time in our last board meeting really speaking to, well, what is in other expenses? What does that look like, and why do we need it? Well, it helps us pay rent, it helps us keep the lights on, it helps us have running water, so all those necessities for the business that we are in of healthcare. So that's where you see that one. And then Metro indirect expense, just to share, that's literally what's taken out of our subsidy. And so that brought us to 75.9, and then a total expense of 161.6. And so that's our budget, which is a decrease of $6 million from the current trajectory that we have been on for FY25. And so our ask, and I just learned today too, thanks to Ken, next Wednesday we'll need to share information and present information with the city, it's my understanding, for the city's budgeting process. But we cannot do that, is my understanding too, unless we get approval and authority from this finance committee. So the ask is for 66 million.
The Metro indirect dispense, is that the Bordeaux? What is, you said that's taken out of our subsidy?
That's taken out of the subsidy.
That's the insurance for that type.
Oh, I see, okay.
I had a quick question about our Metro funds coming in. And I don't know all the history. I've seen the history specifically to what we've received, not what we've asked for. And I guess formulaically, are we always trying to get X percent more than we think we're going to get? Is there a rhyme or reason to that specific number? I guess I'm just trying to remind myself and others how that number comes about. And then, have we ever gotten what we've asked for?
I do have the history. I can email you the history, and year over year it will show you what we have received. I do not know if we have not ever received what we asked for, or I know that we have not always received what we asked for because of last year. So I'm not sure about that piece of it. But we base it on our need for the organization.
But it's calculated to give us a positive operating
Yes.
margin.
So,
2.3
thank you for
million.
noting that out, Dr. Martin. So we're Safety Net Hospital. Our intent is to get back to base and stay positive, but we're not going to be a for-profit. So we're not going to see, and I work in all of the above settings, so we're not going to have millions of dollars in reserve, and we're not going to. So the best budget, and in this intentional, and it is to be good stewards, is to get back to what we are showing you, right around $345,000.
Any further questions? I want to let you know that I appreciate the work that's been put into this to portray it in a way, and most importantly, explain it in a way that is helpful to our committee, and I think makes it more easily understandable. Going forward, I want this to be collaborative. I think it's very helpful to have a conversation at a higher level, and then you push down to your executive leadership team, and then there's an actual budget. And the budget makes sense. And the budget is based on what the needs are, can be up or down based on what those needs are, and revised. But I do think that it's important for people to stick to a budget. It's what we have to do at home, right? We hope our federal government does that, but that's a separate issue. But it's, that's why we have a budget. So I am really excited about what this looks like, about each of our executive leadership team members working with you to make sure that an accurate budget is presented and then adhered to. So thank you for your work on this. Next item on the agenda is contracts. I'm sorry, we need an approval.
Thank you.
I'm sorry. Excited about our contracts. So I would, on that note, I'd like to call for a motion on the approving of the preliminarily approved, that is the fiscal 26 budget. Is there a second? Second, all in favor? Aye, motion passes. All right. Now, Dr. Elders, if you would come up and tell us a little bit about the first contract, Carl Stortz. Thank you.
Good afternoon, Madam Chair and Finance Committee members. What I present today is the Carl Stortz Endoscopy America Operation Agreement. We've had an agreement with this company for the last 5 years. This is a capital lease refresh for OR and endoscopy equipment. Our previous lease was $9,881 per month. This increases to $11,468 per month, which is an additional $1,586 a month, for a total contract over 60 months of $670,828. This capital lease refresh does three things. It gives another 5 years to rollover items that still have useful life, as well as replacing end-of-life and end-of-service existing equipment, which is the anesthesia equipment and difficult airway equipment, and it also includes our video towers. Also includes the urology service line, blight cystoscopy, and so it does all of these three things. If you look in your packet, it lists out every single piece of equipment or service agreement in that proposal. Now, I did recognize that in the packet, the top signature sheet, which I'll have to get to you, it doesn't say anything different. It's just the signature sheet for that proposal that's in your packet. I'll take any questions at this time.
Is this state of the art.
Carl Stores, absolutely, yes, ma'am.
It is, because
Yes,
we want the
ma'am.
best for the people's hospital.
They are the vendor for multiple facilities across the nation. Yes, ma'am.
Okay, so, and how long is this particular contract for?
60 months, 5 years.
5 years. So suppose that in 2 years, something else fabulous comes about. And I'm sorry that I'm not using very eloquent terms. But just something that is going to be even better, even more efficient, and will provide excellence and, that cutting edge. Can we get out of this and be able to do with the
I
other?
believe there is out in this capital lease agreement. Hold on, I have to take off my glasses.
Yeah, without penalty.
60 days, but not more than 120 days written notice. Yes, ma'am.
Yeah, because it just, and I know with, innovations and so forth, I mean, they're just moving so quickly.
Yes, ma'am.
And so it always gives me pause when I think we're just locked into something that there could be something
The
else.
60 months is to lock in the price, and so our previous capital lease agreement with them was the same 5 years. We've been in it for that time, and it expired on 1/27. It was slated to come to the January board meeting, but it didn't make the agenda. So it's expired, and we need to just do the renewal. So I agree with you that if something comes along, but what we typically do is if that happens is there's a period of trial, and then we take it to our, what we call VAC committee, and it has to be approved by the organization to even move forward with another product by all physicians and players in that clinical environment.
Well, that's very reassuring to know that there's constant oversight of the equipment that you have.
Oh, absolutely.
Because that is just...
Our perioperative director does an awesome job.
Sure. And I have all confidence in that, but it's just when it comes down to the actual machines and the technology and whatever, it just, we have to really keep up.
Yes, ma'am.
Dr. Ellis, so, I mean, looking over this list, stuff is all essential,
Yes, sir.
to running an operating room and endoscopy suite.
Yes, sir.
So this is about equipment that we lease.
Yes. It's a
Not
capital
that we
lease
own.
No, we don't own it.
Okay.
Capital lease and service agreements.
And including in this is maintenance of that
Yes, sir.
equipment
Yes,
and
sir.
replacement.
For the rollover items. So there are some items that are that still have life, but they're into service. So this refreshes that service agreement with us. But then they're also replacing some of the existing end-of-life equipment and video towers with the new technology that has been, they're not replacing it with the exact same thing. It's new technology that they've proposed as well.
Thank you.
The only question I have is, this says that there's no bids received. Can you talk a little bit about that? Normally when we get, no bids received. So normally we would go to RFP if there's something specific. It sounds like since this is a continuum of a relationship, maybe just hit that really quick. Thank you.
Yeah, it's a continuation of a capital lease that, like I said, we've had in the past. It expired on 1/27, and so we typically, because there's rollover items, it would cost us more to go out and replace all of those new items. So they do a refresh of end of life, but they also extend the service agreement on that equipment that still has working life.
Yeah, just to reinforce that, I mean, Storz is one of the 2 or 3 leading companies in this area, and you don't change companies, every few years. You got good stuff. You've got I think a reasonable price. Everybody knows how to use this, is used to it.
Yes, sir.
Unless you own equipment and it's end of life, then you bid out and look at new things. But this is more of a continuum.
Yes, sir.
Sounds great. Thank you very much.
Thank you.
Appreciate all the comments and education as well. That being said, I will entertain a motion to approve the Carl Storz agreement. I will second. All in favor? Aye. Motion passes.
Thank you.
Next on the agenda is the CMS Imaging, Inc. contract, and Dr. Brown, thank you.
Yes, Madam Chair and committee members. What we're presenting today is another contract for CMS Imaging for our cath lab. It's a maintenance agreement. That's a 5-year agreement. Normally, we don't bid those out because what happens is the company that doesn't manufacture the equipment does a markup on it, and then they actually hire the same company that we're going to hire. So to answer that question, that's check no for out to bid, no. Because then we just end up paying a management fee for someone else to do, and then it delays the turnaround time for the equipment as well. And so the useful life of a piece of radiographic equipment is 7 years, so we're asking for a 5-year term on this piece of equipment.
So I'll just ask the same question. This is state-of-the-art,
Yes.
going to be the best?
Yes, Dr. Nettles. This is currently state-of-the-art equipment. It provides detailed imaging and real-time fluoroscopy for the providers.
This is our new cath lab.
Yes, sir, Dr. Martin.
When are we expecting, again, the cath lab to be up and running?
The last report out was May, Madam Chair.
Any further discussion? Okay, if not, I'll entertain a motion to approve the CMS Imaging Service Agreement. Second. All in favor? Aye, motion passes. Last contract is Compliance Line LLC, which is a new agreement. And we will have, okay, go ahead, sorry. Susanna Sells come in and present that material. Thank you.
Yes, thank you, Finance Committee members. I am presenting a contract. This is a sanctions check application that is part of a compliance program. I can read from the OIG General Compliance Program Guidance, where it indicates monthly screening of LEIE and state Medicaid exclusions lists, as well as additional articles from the Healthcare Compliance Association, where it indicates that screening is highly important, a part of a compliance program, as well as from the main guidance from the Special Advisory Bulletin from the effect of exclusion from participation in federal healthcare programs, that the Balanced Budget Act authorized the imposition of CMPs or civil monetary penalties against providers that employ or enter into contracts with excluded persons to provide items or services payable by the healthcare programs, and that if a healthcare provider arranges or contracts by employment or otherwise with a person that the provider knows or should know is excluded by OIG, the provider may be subject to CMP liability if the excluded person provides services payable directly or indirectly by federal healthcare programs. So we, as the compliance area, went out and looked at 3 different companies that could provide this screening. We evaluated the companies. We found one that was great and offered the best service out there. As you can see, it is an annual payment by the hospital. It is a 3-year with 2-year renewal, but this is a highly necessary and needed product for the compliance area. That way we can do screening and then be able to look at it as a compliance committee. I imagine Christy would want that on the agenda for the compliance committee. That way we can review and make sure all of our vendors and perform the necessary sanctions check as a hospital.
You had mentioned 3 companies, but this is the, I guess, the winning bid. Is that correct?
That is correct. We looked, the 3 companies we looked at was Compliance Line or Ethico, Streamline Verify, and Sanction Check USA. The previous, we had a vendor that was offered, which was SureCheck, offered through another vendor, and we went out and we researched and found that this was the best company. and could provide a plethora. And in fact, I went and found or did a sure check on myself to see how many vendors how many agencies it actually conducts a search on, and it's 101 agencies.
Great. Okay, any further discussion? If not, I'll entertain a motion to approve the compliance line service agreement. All right, I'll second that. Discussion, all in favor? Aye, motion passes.
Thank you.
Okay, thank you. Next item on the agenda is the financial statements. Dr. Blackledge. Oh, sorry.
So,
Mr. Moran.
Mr. Moran, I'm Keith Moran. I'm the controller. I've been here 6 months. So, I was, no, it's July, end of July, so, it's probably 8 months now, yeah. So anyway, I've worked for healthcare for numerous years, so I've got a lot of experience with external auditors and all that. So one thing I can guarantee is next year we won't have an audit like the one we had. So, and it also will be organized differently than the way this audit was. One thing we didn't have is a pre-audit meeting. We didn't have weekly communication with the auditors. It was all done virtual by email. So email or they had a site that we dropped items off of too. We found out about the audit adjustments the day before the audit was to be finalized. And we also found out the management letter items last week. So next time I want to be brought every week. I want to continually update. So that's going to be a big ask of Crossland if they are the auditors next year. So anyway, so. All right, December financial statements. So, there's two items that really affect the December financial statements, and that is our Cerner implementation, and also the lack of procedures that we had in the cath lab. So that really affected our revenue and also our expenses for the Cerner project. So the Cerner project so far this year has probably been about $3 million of expenses related to the Cerner project. So our revenue for compared to a year ago, is $500,000 less in the inpatient and $1 million above last year's outpatient revenue. Our net revenue is down by $400,000, so that's very good considering the Cerner project, and we only dropped $400,000 from a year ago. Our other revenue is up $1.2 million compared to a year ago. One thing that really impacted in our expenses, the expenses were up $3.2 million, and a lot of that is the Cerner project. It's $900,000 in salaries, contract labor is $1.3 million. Our physician services was up $450,000, and then our utilities were up $300,000. So that really sums up the month for a overall loss of $3.4 million for the month compared to a year ago of $1.3 million loss. But our budget had predicted a $436,000 loss. So I know that was kind of quick, but any questions or comments that?
I think at the last meeting, we also talked about my concerns with contract labor, having a variance of almost $3 million, salary and expense, $2.7 million. And I believe I had asked for a breakout of the contract labor / contract services to make sure that we understood where, what those contracts look like and how much those, who's been paid what. So I know you guys have been busy, obviously, with Mr. Nairmore leaving, but I still would like to make sure that that is broken out and we have a true understanding of who we're paying, what services they're providing, where they are in the process, what goals and objectives they have, and where they are in achieving those, and when this is going to be over. So I think those are really important as we are budgeting going forward, since it is just grotesquely over what we thought. So thank you.
As far as contract labor, we are evaluating all of the contract labor to see whether it's still needed. And part of it has got to do with the Concerner project, is pretty good, and that ends this month. So that will be dropping off.
Madam Chair, to add to key comments, there was about 2 point some odd million that we anticipate cost savings on, and then there is a list of items that are being vetted for cost savings to add to that comment.
Yes, we can give you the list of all the vendors that we're paying and what they do.
Got some work to do on that.
Mr. Moran, looking at the year-to-date data on the right side,
Yes, sir.
it looks like we had projected income of $6.5 million for the first 6 months, and we're actually down $12 million. So we're 18-something behind budget. Am I interpreting that correctly?
That is correct.
Is there anything about, what month it is? Can we expect to make some of this up over the next 6 months?
A portion of this is due to state funding that we were expecting of $10 million that we have not received. We're not sure whether we will receive those funds or not. So that is a big part of the budget. Yeah. And then we had asked, in the beginning for additional, I think it was $63 million from the city, and we got 59. So
that is expected.
Yeah. And then the $3 million Cerner.
Yeah. Can you tell us more about the $10 million that we may or may not get from the state?
Yes, that is from they're redoing the pools. I think we had discussed this at one meeting prior to this, but the state is redoing the CPE pools, and they're going to reallocate the money based on a process they're coming up with. So in my understanding, in March, we should receive some information on that in about 2 weeks, hopefully, if they're on target. And we had budgeted 4 payments of $2.5 million that we did not receive.
So that total sums up to $17.4 million.
So in 2 weeks, we will have an update on whether or not money will come in. Is that accurate?
I can't guarantee that. I hope so. It depends on the state. So I think it's March the 15th or 16th is what their target was, but that was a proposal date. So I don't know if there's a guarantee to that date or not. But we are investigating that to see where we are on that.
If it comes in, when would it be credited to us?
It would be immediately.
Immediately, and that would be 2.5 million, or when was it supposed to start, and when would we start receiving it?
Well, we don't know that part is the problem. We are unclear on whether we'll even get that money. So when it comes in, whatever amount comes in, that's when it will be credited.
And going forward with regard to our budgeting, obviously I understand that there are variables outside of your control, but is that even appropriate to be putting that type of number into our budget, I guess is the other question.
To my knowledge, it has never not been funded. Do you know?
It just wasn't funded this year.
It hadn't been funded this year.
Hadn't been funded this year,
It
so
hadn't been
that's-
funded this year. So when we look at the year-to-date, and I don't know what month it was paid the last year, but the year-to-date at this point in time, we were sitting with 14 million versus the 12.
Yeah, that's not related to this.
Unrelated to this?
That's
Okay,
unrelated to
same.
this. We've gotten zero of these funds
This year?
this year.
Okay, and when did it come to us last year?
We were expecting it in December of this year. So it was usually around the fall, winter, and the spring.
So last year we received it, last
Yeah.
fiscal year,
Yes.
received it in the fall.
Okay.
You want to cover the balance sheet?
Carry on. Sorry, we spent a little time on that one.
All right, so I'm gonna go over the balance sheet with you. So one thing about the balance sheet and the income statement, they are reasonable estimates. They're not exact numbers, okay? So when you get income statements, there's a lot of estimates, and the balance sheet the same way. There's also a cash flow statement that is really showing pure cash. So on the balance sheet, you can see that December we have $5 million in the bank. That's what we currently have as far as December. Where in November we had 10 million, so we decreased cash $5 million in the month. Patient AR has remained consistent between this month and last month, and has decreased from a year ago, from June of the past year. As far as the property, plant and equipment, that has gone up $4 million based on nurse call system, different things that we have put in place here. Our accounts payable has increased since June, $2 million. You'll notice there is subsidy income of minus $3 million, but that is a timing difference with the city. That's pretty much the big highlights on the balance sheet. And if you want me to, I'll go over the cash flow statement also. And this is probably the most important financial statement in here is the cash flow, because that's cash is king. So you can tell that since this in year 25, we have decreased cash of $8 million. We're down to the $5,445,000, which is on the balance sheet. You'll see it on the balance sheet. And that's and this tells just different areas of where the cash went.
Any specific comments about where the cash went to?
No, you just tell that the accrued liabilities went up. There's no real, it's just timing difference on the city, so.
Okay. Where would you like to see us at with regard to cash in the bank and having, in a perfect world, where would you like to see that number?
In a perfect world, I'd have about 90 days of cash.
Perfect.
How much cash would that be? I was afraid you were going to ask that. I will just follow up and give you a more accurate, because I'd be just off the top of my head. So.
Or another way of asking, how many days of cash do we have now?
Cash on hand, we have $5 million. So we don't have many days of cash.
Okay. Anything further on their financial statements? Okay, great. Seeing no more comments, I will ask for an approval, the motion to approve the financial statements for December 2024. Second. Motion passes. Thank you for the work, and look forward to hearing more on these. Revenue cycle, Dr. Blackledge. Oops.
Apologies, I was, very quickly for revenue cycle. Good afternoon again. As it relates to cash, year-to-date cash through December, most recent 2 months, November and December pictured here, we're slightly below our cash target. However, year-to-date, when we look at the year, we don't look at one period in time or 1 month in time, we look at the whole year. We were still averaging 101.4% above target, so that was good performance across the continuum, that piece. If I move to unbilled, as many of those in the room are aware, as we went live with Cerner mid-December, and we hit like 7.16 days. And the teams have continued to focus on these unbilled days, but that's a result of the go live with Cerner. We can move forward. Denials management. We had some insurance eligibility issues in the month of December that challenged us as it relates to our denials inventory. Again, to see the denials inventory is just denied. It does not mean that it will not be paid. It takes us longer. And was there another? Well, I think that would be it then from the revenue cycle. But Standard & probably have some team members here, but I know we're short on time right now. Thank you.
And you would attribute, the delay in some of this due to your team focus on the Cerner implementation that just happened?
Absolutely.
Is that correct? So going forward, we'll see these numbers come back down.
So I don't know if you recall, but probably, I can't remember, several months ago, we talked about the Cerner implementation and what that looks like over a period of time. And once you go live, you have a lot of mapping and a lot of additional work that must occur, and all departments are working different. So we have to ensure charges are there. So we look at every bill. So January and February will still be impacted by the Cerner go live because it's the recovery period, which that period is about 90 days on the recovery period.
When do you think you'll be quote unquote fully implemented?
We're implementing
So
recovery. So we're looking at towards the end of March, April for recovery. Yeah. And we're seeing some of the incline now coming back up, but that trajectory is for about a 90-day period.
Excellent. Good. All right. Anything else, Dr. Nettles? Okay, great. Okay. That concludes our Finance Committee meeting, and I will entertain a motion to adjourn. Thank you.